China's economy just collapsed. The threat of China's economy collapsing is a significant factor in the international arena since it has caused shockwaves to go through the financial markets and sparked concerns about a worldwide economic downturn. Recent evidence hints at vulnerabilities in China's economic structure, which raises concerns about the potential for ripple effects that could echo around the world. Welcome to Money Ocean, your ultimate destination for navigating the vast seas of finance, wealth creation, and success stories from around the world. I'm thrilled to have you on board as we embark on a journey to explore the depths of the global economy and uncover the ripple effects of China's economic downturn in today's episode. Join us as we dive into the turbulent waters of international finance, analyzing the implications of recent developments on markets, investments, and economic stability. The purpose of this story is to investigate the roots, manifestations, and probable consequences of China's economic downturn on a worldwide scale. This will be accomplished by delving deeply into the numerous implications of China's economic slump. Additionally, it will emphasize the importance of taking preventive measures and collaborating with other countries in order to address the issues that China's economic difficulties pose. Since the opening of its economy in 1978, China has experienced growth that has never been seen before, bringing it to the forefront of the economic landscape on a global scale. China's economic miracle has helped elevate hundreds of millions of people out of poverty, encouraged technical innovation, and established the nation as a manufacturing powerhouse. The average growth rate of China's gross domestic product, GDP, is roughly 10% each year. On the other hand, as both the Chinese government and the Chinese people embraced borrowing to fuel expansion, this spectacular ascent came with an increasing debt burden. The Chinese government's emphasis on infrastructure investment and growth driven by exports was a big contributor to the country's economic expansion. The fact that China's debt to GDP ratio has increased to above 66%, which is higher than the average for the rest of the world, indicates a dangerous level of indebtedness. The rapid accumulation of liabilities in the country, which was made possible by a feedback loop consisting of borrowing and investing concerns, have been raised regarding the viability of the economic model that the government employs. These vulnerabilities have been made worse as a result of the recent installation of strict COVID-19 containment measures and regulatory crackdowns on over-leveraged sectors, including the real estate industry. These policies threaten to generate a negative feedback cycle of defaults and an economic recession. Concerns have been raised regarding the quality and sustainability of China's economic development as a result of the country's reliance on growth that is powered by debt. The Chinese government has begun a series of policy interventions in response to the growing economic challenges that the country is facing. These interventions are aimed at stabilizing the economy and achieving common prosperity. However, despite the fact that these initiatives, which include reductions in interest rates and regulatory reforms, have not yet alleviated concerns about an impending crisis. Furthermore, the economic difficulties that China is experiencing have wider-reaching repercussions for the economies of the entire world. The Federal Reserve's decision to tighten monetary policy and the subsequent strengthening of the US dollar serve as evidence for this. In spite of the efforts that the government is making to encourage growth, the success of these policies is still unknown because of continued structural issues and external headwinds. As a result of the interwoven nature of the global economy, The economic slowdown that China is experiencing has far-reaching implications that extend beyond the borders of China, due to the fact that China is responsible for more than 18% of the global GDP in 2021. A sudden collapse in its economy could lead to a recession being experienced all across the world. Additionally, the fragility of global markets has become even more apparent as a result of the convergence of the economic problems that the United States, Europe, and Asia are currently experiencing, increasing the likelihood of the synchronized decline. Within the context of reducing the negative consequences of China's economic slowdown, the interconnectivity of supply chains and financial markets highlights the significance of coordinated policy responses and international cooperation. As a result of the unpredictability that surrounds China's economic trajectory, investors are confronted with the challenge of protecting their portfolios from the possibility of declines. Diversification. Maintaining cash reserves and making investments in hardy assets like US equities are just a few strategies that can reduce risk and preserve capital. Additionally, opportunities may present themselves in public growth companies due to the fact that market volatility offers the possibility of substantial gains over the course of a much longer period of time. Nevertheless, investors need to maintain vigilance and modify their plans in order to accommodate the ever-changing market conditions and various geopolitical situations. To successfully navigate the difficult terrain of global markets in the midst of China's economic challenges, it will be essential to allocate resources in a wise manner and to concentrate on fundamentals that are relevant over the long term. In light of the fact that the globe is currently dealing with the possibility of China's economy experiencing a downturn, it is of the utmost importance to acknowledge the interrelated nature of global markets and the potential repercussions for economies all over the world. Investors are able to adopt informed strategies to traverse tumultuous waters and position themselves for long-term success in the face of uncertainty if they have a thorough understanding of the roots and implications of China's economic issues. In order to weather the storm and emerge stronger on the other side, it will be essential to maintain alertness, adaptability, and wise decision-making while the global economic landscape continues to undergo continuous change. Furthermore, it will be crucial to improve international cooperation and policy coordination in order to address the systemic risks that China's economic downturn poses and to promote economic resilience on a global scale. Thank you for joining us on this insightful expedition into the intricate web of global economics. We hope you found today's episode of Money Ocean enlightening and thought-provoking. Don't forget to like, subscribe, and hit that notification bell to stay updated on our latest episodes, where we continue to unravel the mysteries of finance and chart a course towards financial success. Until next time, may your sails be filled with prosperity and your investments yield bountiful returns. Farewell, fellow adventurers, and remember, the journey to financial freedom begins here at Money Ocean.